Welcome back to the Fonti International. This is our options segment, and I'm extremely happy to bring to the show a very special guest this evening, Anthony Saliba, CEO of Matrix. Good evening, Anthony, and thank you so much for joining us.
Good evening, Alexa. Thank you very much.
Anthony, before we go to the options, I just want to show you the U.S. indices so far, literally hitting new record highs. S&P 500, 3,097 points, but it was above the 3,100 level. Dow as well, 0.15 in the green. Nasdaq Composite almost 0.5% in the green territory. Crazy points, 8,500 points. How far can we go with these crazy levels?
Well, the technicals look really good, and definitely the trend is up. So coming into the new year, you typically have with last year as an exception, you typically have a Santa Claus rally. I'm not a technician. I can't tell you how far we can go, but I like the way it looks. I mean, today will be the 100th new high in this era of Donald Trump. If it continues this way, it's quite exciting, and it's exciting for options traders.
On the other side, let's get back actually to the options. I just wanted to point out that last week, exactly in the middle of the earnings season, calls more than doubled puts, with over options trading volume just above twice the daily average. Is this an overreaction, kind of, how can I say, exaggeration positivity?
Well, it could be, but I mean, the earnings seasons are always really interesting. We need to continue to see some good numbers to hold the valuations and continue to move up. But I think a lot of people are just bullish at this time. There's not a lot of great places better than the U.S. market to put your money in. That's why I think you're seeing a lot of call purchasing. As I said earlier, the trend is up, and it makes a lot of sense to us.
Let me ask you, are you bullish on the technological sector?
Well, I think the technology sector is a big part of our economy, and it just generally needs to be considered for all economic revenue growth. I personally don't have an opinion on the sector itself. We're mostly neutral executing brokers, but we do see a lot of activity, and a lot of that activity is call buying. So it seems to be very bullish.
On the other side, we're witnessing extremely low volatility. Do you think this is a good level?
Well, there's a compression on volatility. It seems to be that anytime volatility pops its head up, it gets sold down pretty rapidly. So the quote-unquote fear index isn't that fearful. It's a matter of discussion in a lot of professional circles, where the capital really looks forward to selling any vol. So it's very difficult to see an extended expansion of the vol levels that we were used to in the past. It's going to take a extremely protracted and unexpected, scary type of move to change that right now. So I think, spread trading is much safer for your audience than just straight out and out option buying.
I was exactly about to ask you something that is very interesting for our viewers. How do you understand when volatility is about to explode, to reverse downward?
Well, we don't have an indicator that is foolproof detection of when it's going to explode, but historical volatilities, looking at today's implied volatilities and basically gauging the difference between the two. Right now, call verticals are reasonably priced, and the fact that you're able to participate in the direction that you feel most comfortable with, less capital at risk, makes a lot of sense.
And can you also share with us which are, how can I say, suitable or even best option strategies to apply till the end of 2019? We're at the fourth and last quarter of the year. So what are we supposed to do? What are investors, retailers, all of them supposed to do?
Well, you know, I've been a butterfly trader all my life, and I like taking the directional position that the investor is most inclined to, let's say in this case, bullish trend, and then looking for an opportunity to sell the other side to create a low cost or no cost or possibly even credit butterfly situation and maybe one of the indices. That way, looking at a slightly out of the money butterfly would give your listener or viewer a chance to participate in a slow grinding upward move with less risk. And that would probably be a two-stage trade process. But you know, right now, you know, volatility is very interesting, and I would say a neutral vol for vol spread like that would be less risky.
That's very interesting. We're getting real-time questions from our viewers, and the next one is it the right time to write a covered call on an index or a stock, in your opinion?
Well, really depending on the stock, you know, the vol being as low as it is, it's difficult to make that suggestion. I think it's the best time to write cover calls are after a downward move where the stock is looking to bounce and some volatility has come back into the structure.
On the other side,
I would say if you already, sorry, Alexa, I would say if you already have a stock position and you feel you've done well in it, then covering that stock position, that's a different story.
On the other side, another question coming from our viewers, can you advise them some book, good reading for beginners and also for advanced?
Sure. For beginning traders, okay, so, you know, I've written some books on spreads. I don't want to toot my own horn, but they're manuals that help walk you through the process of constructing spreads, and the way we wrote it has question and answers, so you take some quizzes in the book to help you understand that you've taken those steps all along the way. For advanced traders, a good friend of mine, Nassim Taleb, wrote Dynamic Hedging, which is a real good book on gamma scalping and understanding really what professional traders go through in terms of their dealing with theta and decay. And it's you know, it's a pretty meaty book, and I think it would challenge intermediate traders to take the next step.
That's extremely interesting, Anthony. Let me ask you one last question. What would you advise our option traders till the end of the year? Can we expect major sell-off? That's the question I ask each and every one of my guests. Well,
I don't see that in the market right now. I think that you have a lot of positives, including some sort of resolution potentially with trade, trade impasse that we have with China. And my whole thing, Alexa, is staying spread is staying alive. Whichever direction you pick, using options and trying to have a multi-leg strategy is preferable. And if you are going to punt, low-cost options are the best. I think that the decay is really going to kill you.
But do you also cover European stocks and also indices, or you're only focused on the U.S.?
Just on the U.S. market. Matrix execution covers all of the listed U.S. Options and futures. So we have professional and semi-professional clients that trade mostly in the U.S. market.
All right, thank you very much, Anthony Saliba, CEO of Matrix. Thank you so much for joining us, and have a great day.
Thank you, Alex. Have a great night. You take care.
Thank you. Well, as you can see, U.S. indices are doing great job this evening. S&P 500, 3,097 points, Dow 27,730, and Nasdaq Composite 8,503 points. We're heading for a very short commercial break, but stick around because we're coming with the stocks to watch. Welcome back to Fonti International. As we can see, it's extremely positive trading session for the US indices. All of them are rallying, and I just want to have a very quick recap what actually President Trump said addressing the Economic Club of New York. He said that China cheated America on trade, but he also blamed not only China but the US leaders for letting this happen for all those years. And not only, I just want to highlight something very important, that he slammed the Fed once again, he actually said that markets and economy would be doing even better without Jerome Powell mistakes. Let me just have a very quick also update. He also said, but we all make mistakes, don't we? This is what the president said. Not too often, we do make them on occasion. And I just also wanted to remind everyone that we're going to broadcast Trump's speech a little bit later, actually after 8:10 p.m. Central European time. Certainly you will be able to hear all the remarks that he had to say this evening. As we can see, so far, very positive reaction of the markets. But anyway, it's a big day for the single stocks. I should point out that Apple is back at the helm of Wall Street. That's definitely the biggest market cap company once again. As we can see, $262 per share today. It's pretty flat, 0.06 in the positive territory. Another stock I would like to talk about is definitely Google. As we can see, it's 0.5% in the green territory. Actually, Google is engaged with one of the US largest healthcare systems on a project to collect and crunch the detailed personal health information of millions of people across 21 states. The initiative, codenamed Project Nightingale, appeared to be the biggest effort yet by Silicon Valley giant to gain a toehold in the healthcare industry around the handling of patients' medical data. Amazon, Apple, and Microsoft are also aggressively pushing into healthcare, though they haven't yet struck deals of this scope. The data involved in the initiative encompasses lab results, doctor diagnosis, and hospitalized records, among other categories, and amounts to a complete health history, including patient names and dates of birth. Neither patients nor doctors have been notified. At least 150 Google employees already have access to much of the data on tens of millions of patients, according to a person familiar with the matter. This is a research of the Wall Street Journal. Actually, Google said so far that everything is compliant, all the privacy data, but already we saw a little bit of privacy concerns sparking after this case. We're certainly going to comment it, but I want to talk about another major story in the last few days, and it's regarding this time Walgreens. Have a look at Walgreens. Today is also a great day for the stock. A little bit of more than 0.5% in the green territory. KKR actually has formally approached drugstore giant Walgreens Boots Alliance about a deal to take the company private in what could be the biggest ever leveraged buyout. The New York-based private equity firm has been preparing a proposal to potentially buy out shareholders of Walgreens Boots. It's unclear how feasible the transaction would be, given the need for large amounts of financing, and Walgreens Boots and KKR would decide against pursuing a deal. This is what are actually the latest Bloomberg reports regarding the story. That's certainly extremely interesting. That's not the first case that KKR is bidding for a public company. We saw also the German Axel Springer, but so far they haven't both of the companies. Anyway, before we go ahead, let me bring to the show my next guest this evening, Matthew Malley, Managing Director at Miller Tabak. Good evening, Matt, and thank you for joining us.
Thank you very much for having me. Excuse my voice. I'm just getting over a little bit of a cold, but hopefully it'll be okay.
No worries, Matt. No problems at all. Matt, I mean, if we have a look at the chart, it's incredible. It's extremely positive trading session. I don't even know where to start from, but let's start as always with the technological sector because actually yesterday or the day before yesterday, Apple got back at the top in terms of market cap on Wall Street. Are you surprised by that? How stable is this company at the end?
Well, it is a little surprising because it is getting a little ahead of itself. In fact, I was looking at its short-term chart, and you look at the RSI chart, well above 80 now, and that's very, very overbought. It's the most overbought it's been in several years, actually. That doesn't mean it's a bad company. That doesn't mean the stock's going to correct 10% or 20% or anything like that. But it does tell me that this key leading stock, this leadership stock, is getting ahead of itself, and the technology stocks in general are doing the same. So it wouldn't surprise me if we got a little bit of a pullback. It's interesting because we have Thanksgiving week here in the U.S. is 2 weeks away. Once we get past the president's speech today and the Fed testimony, Chairman Powell's testimony tomorrow, we might see a little bit of a pullback over the next week, week and a half. And then Thanksgiving week, which is usually a very positive week for the stock market, then maybe we can get another rally. But again, I think things are getting a little ahead of themselves, and Apple is a key indicator of that. But again, that's not a bad thing. I don't want to say, oh my gosh, everybody should sell their stocks. It just says that maybe you shouldn't chasing the market right up these levels at this moment.
On the other side, today was the day that we saw once again privacy concerns sparking regarding Google and its new project called Nightingale. What do you think, first of all, about this project? And secondly, do you think now, since it's involving with the healthcare sector actually is going to be our kind of safe haven in the future?
Yeah, it's a concern. I mean, to be perfectly honest with you, I'm surprised that Google isn't under more pressure, the stock that is. And I think it will be as we move into next year. I mean, one of these things that everybody is worried about, of course, everybody talk about whether it be Facebook or Google or Amazon, some of these bigger companies with them, over, the big brother, whether everybody's looking over your shoulder. I mean, that's the much bigger issue here in the U.S. than it is whether they had an impact on the elections, believe it or not. And when people are losing their the secrecy or the privacy of their health records, it's something that concerns them, and it's something that in an election year, especially after we get past, as we actually move into 2020, I think you're going to see Congress and other areas, and for that matter, the administration, push back even harder than they have already. We've seen it keep the Facebook stock from rallying by a lot. Amazon, because of their cloud issues, is also very involved there, and then Google itself. So this is a stock that I think is going to face some bigger headwinds than they are right now, and I don't know that this is one that you really want to be chasing.
But Matt, that's exactly my concern. The fact is that if the Democrats would won the elections, which is so far not the most likely scenario, but still possible scenario, I mean, what can we expect for these technological giants? I mean, for all of them.
To be honest with you, it would be more if the Democrats looked like they were going to win, especially if not only were they going to win the presidency, but if they were also going to win back the Senate. Which right now, again, neither one of those look, well, the Senate looks less likely. You just never know what's going to happen on the presidential side because we don't even know who the Democratic nominee will be. But to be perfectly honest with you, I think this is an issue for both sides. And again, I don't necessarily think it's going to cause the stocks to get absolutely clobbered, because remember, they did get clobbered at this time last year, in the fourth quarter of last year, and they wrung a lot of those excesses out of the group, out of those big names. But I still don't see them as being the key leadership that we've seen. I mean, and you can see it. I mean, there's no question that technology has continued to be a leader for the stock market in this rally, but Facebook, Amazon actually have not been doing very well, and I think Google will have to face some problems as well. So when you're starting to get more deeply into privacy issues, you're going to get a much more pushback on regulation, and I think that's going to hurt or at least cause headwinds for the stocks.
On the other side, I just wanted to point out, I was saying at the very beginning of the segment that it's about to happen, major deal between KKR and Walgreens. And I just want to show to our viewers that Walgreens is the second day in a row that it's performing extremely well, almost 0.5% in the green territory. Yesterday it was even better. First of all, what do you think about this story as a whole? And secondly, do you think it's a good moment to buy Walgreens? Is it worth it?
Well, I mean, we don't cover the stock, so I can't go into too much, except to say that there are other people. I know J.P. Morgan came out today and saying that in a leveraged buyout it could be worth $75. So that still gives it plenty of more upside. Obviously, it's already moved up, but just because the stock has moved up doesn't mean you've missed it. The other thing, of course, is on the one hand, you get a little bit concerned because we have a lot of a lot of debt in the overall system, and of course, Walgreens will have to take on a lot more debt in a leveraged buyout. But there's also a lot of people who talk about what CVS has done and how Walgreens needs to play catch up. in a lot of different things in their walk-in and walk-out pharmacies and things like that, and that's with the kind of things the impetus that KKR would bring into that would probably get them to move quicker on some of these initiatives and play catch up with CVS. So a lot of people, I think, like this this opportunity. And KKR, they're smart people, and I think they see an opportunity there. You're always worried about the amount of debt and leverage that they'll be adding to the company. But I think there certainly seems to be some upside here on several different levels.
I just wanted to point out for our viewers that the dividends of Walgreens are pretty low, like 0.45 cents, which is not really high. Yields 2.93 and market cap $55.56 billion, which is of course a huge amount of money. So Walgreens is definitely not a buy. Is this what you're saying?
No, I'm saying there could be upside, but I think it's more for a trade. The people can get, and they have arbitrageurs who, when you get these announced kind of takeover deals, who get heavily involved in them. But it's again with people like J.P. Morgan saying it's worth $75, that gives it more upside. But I think it's more of a short-term trade than a long-term investment.
Let's talk about one of the major stories this evening, and certainly this is regarding Disney, because it's finally launching its streaming service, Disney Plus. Actually, Disney Plus appears to have been hit by some technical errors just a few hours into its official launch. Some users who rushed to download Disney's new streaming service were met with an unfortunate error message on their screens that reads unable to connect. We saw the comments on Twitter. On the other side, Disney's 1.36 in the green territory. Just for our viewers, very quick recap, PE ratio is 19.93, EPS 6.96, market cap $246.32 billion, and of course the latest dividend was at 0.87, which is almost 90 cents of a dividend. On the other side, I should point out that the streaming service competition is is literally heating up. It's also Apple right now with their streaming service, Disney, Netflix, Hulu. So we have many companies that are heading with their streaming services. Who is eventually going to, win the war? Or you think there cannot be, a real winner among them?
Well, when you have a situation like Disney where they have more than just this part of their business, they will most likely, be the winner. Now, of course, the stock has had a nice run in anticipation of this move by them to get into the streaming services. So, a lot of the easy money's already been made, but that doesn't, it doesn't mean it can't be a winner in the long run. And the thing is, they have this unbelievable backlog. This library of shows and movies, and obviously when you have this Star Wars and things like that, very, very positive for them. Where Netflix, they've got to keep making new stuff. Same with Apple Computer. They don't have a library. Again, I'm not betting that Apple won't be a player, but for them to be a big winner, at least in this area, is a concern. But it seems to me the loser, again, Apple's got plenty of other products that will help them succeed over time. Netflix does not. They've got to, number one, they've got to spread out broaden their business model, number one. But I think it's going to continue to be a tough thing. One of the things that Disney is going to be able to say about how this technology kind of blew up on them, they'll say, oh, yeah, it was our problem. But they can also say, geez, it's been such a massive, such a positive rollout for us. We didn't think this many people would come in. And Disney, I think, smart enough to be able to fix whatever problems they have rather quickly. And so that problem, they'll be able to twist it around and turn it into a negative. So I guess if I had to pick winners, it would be Disney would be at the top of my list. But as you say, it is a very, very competitive field. And until some of those players are washed out or taken over, it's not going to be as much of an upside situation as people would have thought, especially, as I mentioned, with Disney having already seen a nice rally here in the last few months.
But if you personally had to choose, which one would you choose to subscribe to, Disney or Netflix or maybe Apple? I
think if you're a long-term player, personally, my kids are a little bit older. I would go for Netflix. But for a long-term basis, I think Disney's definitely is going to be the real player in the long term.
Because I'm subscribed to Amazon and Netflix, and so far that's absolutely enough for me. I mean, it's going to be almost very difficult to handle all these streaming services, because all of them have actually also very different products inside. On the other side, Netflix today is witnessing, let's say, a little bit of sell-off. Not sell-off is not the correct word, but let's say it's down by 0.6%, a little bit more than 0.6%. Do you think it has something to do with Disney? Because you said that in the long run it's going to be the real actor in the game, or it's not related?
No, I do think it's related. And one of the things is, Netflix, there's no question, some of the shows that they've had are just been incredibly, forget about how profitable they've been. They've just been good shows. The concern, of course, is there's no guarantee that they will continue to come up with new shows. And I just think that the power of children is very, very important. I mean, when you start to have children, you have to have Disney, because they have such a great library. I mean, you could go back to some of the cartoon movies that were made 50 years ago or even longer, but not to mention the ones that have been made in the last 20 or 30 years. You have to have that as a parent, but you also have to have it as a grandparent. So I think if people are going to decide over time which ones they're going to get rid of, Disney's not going to be one of those. It's just, there are certainly people who are kind of in between. Their kids are getting older and they're not grandparents yet. But 10 years from now, most people, I feel, are going to need to have that Disney thing. It's their children, their library for children's viewing is priceless, and it's something people will just have to have.
And Matt, where is Apple in this game?
Well, you can never count them out, because number one, they have the money to do it, and because they have so many other products. They definitely don't have the library, so that's a concern over the short term. But again, it's in this specific area. This could be a long haul for them. But they have the wherewithal to do it, and number one, and number two, it's just, with all as a company, you obviously want to separate it, just because even if they don't do that well in streaming over the next 2 or 3 or even 5 years, as long as they're making progress and they want to, and they are getting some good shows, it's the future of entertainment. It's the future of what they're trying to do, and they have the wherewithal to hang in there. It's going to be a lot harder for Netflix over time to compete with them. It just is. They just don't have the same kind of money.
Matt, let me have a very quick update on the automotive sector. In particular, I'd like to talk about Nissan, because it reported worse than expected earnings. Actually, Nissan Motors slashed its outlook for the full year after reporting another quarter of declining sales and profit. The results show the car maker is struggling to overhaul its business, but both by downturn in the global auto industry and turmoil within the company in the year since the arrest of former chairman Carlos Ghosn. The company cuts its operating profit forecast for the year ending March 2020 by more than a third to 150 billion Japanese yen, which is around $1.37 billion, in part because of slower than expected sales in the fiscal year so far. And the company trimmed its full year global sales forecast by 300,000 vehicles to 5.24 million, and said its expected global revenue for the year of about $97 billion. Matt, I should point out that today we had pretty positive trading session in terms of automotive sector here in Europe, because of course there is a little bit of positivism that US will delay EU tariffs. That's for sure. We couldn't hear anything regarding EU tariffs from the Trump speech a little bit earlier today, but still we saw a little bit of positivism here in Europe. Actually, the automotive sector has been performing pretty well in the last quarter here in Europe. What is your opinion on the sector as a whole? I mean, do you think it's something that we are supposed to avoid, or you do see some bright spots over there?
Well, it's the one thing that people are kind of hoping for, of course, is that the global economy has bottomed. We saw a lot of slowdown around the globe, including in the U.S., and that this slowdown or this rate of slowdown is bottom and will kick back up as we move into next year. That certainly could happen. I just don't think it's going to happen in the way that people are hoping for. It's be interesting because I'll be looking at the industrial production numbers that are coming out later this week to see what kind of movement we have there. The other problem, of course, we have the GM strike. How will they affect those numbers? It can be a little hard one to pinpoint. But the point is, in the old days, all we cared about was, are the numbers going up, are the numbers going down? That's a very important indicator for the global economy. If the economy is going to pick back up, we're going to be fine. Our auto industry is going to take off. But of course, now when we have all these things like, with the change, whether it be Uber and Lyft or automatic self-driving cars and such, you wonder what the future of the industry is. So I'm not saying you want to avoid it, but it's just we have a lot of uncertainty around this issue and around these, what this industry is going to be over the long term. I just think that there are other areas where you can a better opportunity to make profits than you do with so much uncertainty, not just globally, but in the industry itself. And so it's just a hard one to really want to jump in with both feet.
All right, thank you very much, Matthew Malley, Managing Director at Miller Tabak. Thank you for joining us.
Thank you. You have a great one.
Thank you, Matt. Well, we're heading for a very short commercial break, but stick around because we're going to comment on what Trump said regarding Jay Powell. He's also going to speak tomorrow, Jay Powell, I mean, so there is a lot to comment on. Stick around. Welcome back to the Fonti International. So far, S&P 500 0.3% in the green territory, Dow 0.13 in the green territory, and Nasdaq Composite 0.5% in the green territory. Pretty positive trading session for the U.S. indices. As we were talking a little bit earlier on the show, new record highs. Actually, during the day, S&P 500 hit the 3,100 level a little bit earlier. I just want to have a very quick recap on what President Trump said during his remarks at the Economic Club of New York. Actually, Trump renewed his trade attack on China, calling the nation cheaters, though he blamed the situation on past U.S. leaders. Trump spoke, as I said, at the Economic Club of New York, and I just want to read something for you. Since China entrance into the World Trade Organization in 2001, no one has manipulated better or taken advantage of the United States more. I will not say the word cheated, but nobody's cheated better than China. I'll say that. This is what Trump said. On the other side, another extremely important point is that Trump also bashed the Federal Reserve for what he sees as its hesitation to lower interest rates, and blamed the central bank for capping gains in the U.S. economy and also stock market. Actually, he said, and if we had a Federal Reserve that worked with us, you could have added another 25% to each of those numbers. I guarantee you that. This is what President Trump said. And I also would like to remind everyone that you will be able to hear President Trump's remarks later after 8:10 Central European Time. We're going to broadcast this for you. On the other side, in order to comment on his remarks, let me bring to the show my next guest this evening, John Ergas, Chief Economist, Argus Financial Partners. Good evening, John, and thank you for joining me.
Good evening, Alex. It's always a pleasure, always an honor. Thank you.
Jean, I would like to start because there are a few important points that he touched upon, and the first of all and most important for the markets is undoubtedly the trade war. Actually, we've heard at the end of the last week and beginning of this week that China said that they have agreed with the U.S. to roll back some tariffs. On the other side, what we've heard today from President Trump is completely different things. So how do we have to interpret this?
Well, I think what we heard today does not surprise me in the least. It was a rather belligerent tone. It was rather a firm tone. It was a tone which goes back to the original thesis of the seizure of power, let's put it this way, of the Trump administration, which is we are dealing with a nation which is not playing by the rules. So the first thing we must tell them is that they're not playing by the rules, and we will make sure the rules are followed, and there are not going to be any special gifts here. Let's put it this way. So I think the fact that you mentioned it, there's no deal, there'll be additional tariffs is very significant, which means a firm line. Two, that the deal could happen soon, but we have not been given any further elucidation as to when this magic date is actually going to be. Three, that basically the use of when he says, I will not use the word cheating or words to that effect, let us understand that there's still a fair amount of confrontation between the two sides. This is not the
John,
cooperative discussion.
Can you talk slightly higher because we don't hear you?
Good. This is not the cooperative discussion which we have been hearing about, where both sides seem to be agreed on something, but in fact there only seems to be talk, let's put it this way, and no confirmation on either side.
All right, and on the other side, do you agree with what he said regarding Jerome Powell? I mean, he said that's very interesting, and if we had a Federal Reserve that worked with us, you could have added another 25% to each of those numbers. I mean, is this possible?
Look, I don't think so, quite frankly, because I do not believe that economic growth in the U.S. at this point is being fueled by interest rates. If not, we'd have growth at 7%. Quite frankly, I do not believe that we are in a negative rate situation. I mean, in the sense of that this is where we should be. We are not the Eurozone. The American economy continues to expand. We have not seen any real correlation between the rate of capital investment, which is what is critical in the economy, and interest rates. And so therefore, we are having low interest rates as a prudential measure, but that in no way can actually be seen as being a direct, strong spur to economic growth and profits. I don't think this is it at all. I don't buy this line, and I still believe that the incremental impact of any decrease in interest rates is going to be extremely limited, and in fact may well be negative because it will impact on bank earnings. Banks will be able to replenish capital at a lower rate, and shall reduce growth in lending and thus further slowing the economic growth. So I think he's playing here on a very, very, very delicate wire. Yes, cut interest rates, but then think, this is not an economy where people have a lot of money. They must borrow this money. What if the banks start reducing credit as their margins go down? So I think it's rather, let's put it this way, it's an incomplete thought which has not been well elaborated. I don't see this as being the spur in the U.S., quite frankly, right now, because if not, U.S. corporates would not be sitting on huge amounts of money uninvested.
And on the other side, regarding the rate cuts, do you think everything that has been done so far was the correct thing? And I also wanted to point out that Trump said that economy has exceeded expectations, which is actually not so far from the truth, because U.S. economy is probably the only bright spot around right now.
No, I think absolutely right. I think the U.S. economy has barreled ahead. I don't think the growth has been absolutely phenomenal, but I do believe that we've done better than the others. I think the most important achievement, let us put it this way, of the Trump administration has been the formalization of the workforce. Because it's not a question of GDP increasing, it's a question of people working, number of people working, number of people in stable jobs. This is what the achievement has been, and this is what they are going to play on, I believe, during the election, as the election campaign continues. They're not going to say we have 8% GDP. They're going to say, look how many people are working, and look how many of them were unable to find a job under the Obama administration. I think this is what it's really about. Plus a certain amount of deregulation has taken place. The flip side is going to be the huge amount of debt, which untold generations are going to have to pay. But, you know, here we think short term. People look at GDP in a simple way. Do I have a job? Do I not have a job? They have a job. This will create a certain amount of support.
And on the other side, do you think exactly because of this economic boom that we saw in the U.S. And of course this expansion of the 10-year cycle, economic cycle of expansion, Trump might win the elections once again?
Yes, I think absolutely. I think people abroad are underestimating the amount of support. I don't think this from a partisan point of view. I'm just simply looking at it logically being here. I think a lot of people here say, do I have a job? Do I not have a job? Yes, I have a job. Am I earning more money? Yes, I'm earning more money. Things are basically good. And the biggest factor, I think, that they don't say will be their economic well-being. I think this gentleman has a clear chance of winning the elections. I believe that, in fact, if all these scandals or goings on and impeachment proceedings have not reduced his popularity rating, literally, to single digits, then I think that for him is quite a good sign, because there's a latent vote out there which maybe is not being captured by the polls, which at the last minute will reverse in his favor.
On the other side, John, I should highlight that we're seeing crazy levels for the market. S&P 500 hit new record high, intraday record high at 3,100. How far can we go with this rhythm, because it's really fast?
Well, look, it's a very difficult issue, of course. To dissect, how far can the market go? I think the market could go a bit higher, quite frankly. The question is not can the market go higher, the question is, does this rest on sound economic fundamentals, or are we looking at a liquidity phenomenon? I think if the market goes higher from here, it shall be due not to, let us put it this way, a brilliant economic prospect in front of us. It shall be driven by simply weight of money, which tends to be an important factor at this time of year, as asset managers who maybe were reluctant previously to invest say, oh my God, I must make up for the time lost. I must try to make a good return, and I must try to beat the market for the year, and therefore they all pile in. I think now we are switching, quite frankly, from economic fundamentals, monetary policy, to weight of money. This is the most important thing that is actually taking place right now in the market. The dynamics are switching, like I said, from the basics to liquidity. A lot of liquidity is still on the sidelines. If there is, let us put it this way, a non-negative situation where news does not get worse, we may see some of this liquidity start moving into the markets by people who believe they are, for the moment, underallocated.
Jean, let's talk about an extremely important topic. But first of all, I want to bring to everyone a very quick update on what is going on in Hong Kong, because it's definitely a critical situation over there. Hong Kong police actually fired tear gas on Tuesday morning in the Central Financial District over the harbor in Mongkok and at universities to break up pro-democracy protests, which they said were leading the city to the brink of total breakdown. The clashes came at a day after police shot a protester at a close range and a man was doused with petrol and set on fire in some of the worst violence in the Chinese ruled city in decades. A flash mob of more than 1,000 protesters, many wearing office clothes and face masks, rallied in Central for a second day during lunch hour, blocking roads below some of the city's tallest skyscrapers and most expensive real estates. As we can see from the images, it's really terrifying. It's a rare level of that kind of protest. We haven't seen that kind of things even in France with a Gillette yellow. I mean, we've been talking a lot about a trade spat between the US and China, but I think we haven't been talking a lot about what is going on in Hong Kong. First of all, how do you think this is going to end up? And secondly, do you believe it might have any impact on the trade deal between the US and China?
Well, I think that in fact the two issues are closely linked. My basic feeling is one, that there has been like a secret protocol like existed in diplomacy in Europe before the Second World War, where basically we have said, the US have said to China, look, you have a free hand in Hong Kong. Hong Kong is basically your preserve, and you keep out, for example, of our activities in the Middle East. Okay? I think this is very important. We have struck a deal with them. The real point then becomes, at what point do we start protesting and do we intervene in the situation? I believe that there is a complex situation going on here. I believe that it's not a question of if, but when, that we are going to have the intervention by the PRC directly in this situation. And I think that it will end badly. I think it will end with a considerable amount of violence. I see as very worrying right now that we are seeing an attack on the Chinese university physically, that the police is actually using live fire. And this is starting to look to me like an internal Tiananmen from 1989, which I remember extremely well. So I think that it's going to end badly. I do not believe that there is going to be a peaceful solution. They have tried to negotiate with the demonstrators. They have made half-hearted concessions to them, but these have not seemed to work. So therefore, I think this is a very complex situation. Will it play into the trade negotiations? Look, I don't believe that the U.S. is going to break off relations with China over this. I think they are going to say to them, look, you handle this as you see fit. No U.S. administration is going to prejudice that commercial relationship. But I do not believe it's going to end well in Hong Kong, and I believe that the hardliners within the Chinese regime are gathering steam. I would not be surprised if something unpleasant now actually takes place.
All right, let's have also, let's have a very quick look at the energy sector. So far, WTI is trading $56 per barrel, which is 0.14 in the green. Brent is down by 0.10%, $62.16 per barrel, which are, how can I say, slightly lower prices compared to yesterday. On the other side, I just want to focus for a second on the European earnings, because we saw actually better than expected European earnings for the last quarter, and I want to have a very quick update for our viewers. For instance, few stocks to watch are certainly Iliad, the telcos, together with Vodafone, because Iliad shares powered, as we can see from the chart, a little bit more than 20% after the French telecoms company beat third quarter expectations and unveiled a new buyback plan. On the other side, Infineon reported also better than expected results. Here it is, up by 6% today, with a post-tax profit of $161 million. Euros, in line with expectation. And of course, we do see a rally almost 6%, actually a little bit more than 6%. Fellow chip maker Dialog Semiconductor jumped 5.1% after updating its long-term guidance. And not only, we saw very positive earnings for Deutsche Post, for electric components, and Barry Callebaut. All those stocks rallied by more than 5%. I'm I'm just quoting them, but they're not the only case of a better than expected results. And in an European rally, it's been also very positive actually trading session for the automotive sector, and also the ZOO index, the German ZOO index, that brought some hopes for the German economy. So Jean, we said this for let's say the technological, for telecoms and semiconductors, it's not the same for the energy sector, which was hit by a huge downward trend in terms of earnings. We saw BP, also Shell, reporting worse than expected earnings results, citing, of course, low oil prices. First of all, John, let me ask you, what is your comment overall on the European earnings? And do you think that if we saw better than expected results and we didn't see earnings recession here in Europe, there is a hope also for the European economy? Are the two things related?
Look, I think we have a big picture on the European earnings. We are going to be seeing, for example, certain companies will do well because they'll do buybacks, certain companies which will do well because, for example, let us put it this way, they have started a restructuring program. But then there are whole sectors which cannot escape broader macroeconomic trends which do not do well. So we've seen the warnings from companies that are making no recommendations or advice, give no advice one way or the other, from the Siemenses, from the Shells, for example. A lot of groups are commenting upon a weak global outlook, which remains extremely brittle, which is expected to hit their export sales growth and their revenues. So I would look at it this way. First, is there a direct link between the earnings and the economic growth? I would not say it's one-on-one, quite frankly. I think it is somewhat brittle. Where is the link between the earnings and economic growth? It's going to be on the big cyclicals, which work, for example, on supply chain. Fuel, quite frankly, the oil. I think that the earnings may improve. I think the economy in the Eurozone remains extremely brittle. I believe that, yes, we are seeing a bit of an improvement in Germany. Some people are seeing a manufacturing stabilization, which they tend to read as a positive indicator. Now, I find it interesting that people are pointing to manufacturing stabilization, quote unquote, under the guise of a slowing in the contraction of the sector. I do not believe that sector that is still contracting but at a slower rate is necessarily a harbinger of great things to come. So I would be cautious here. I think that investors, quite frankly, yes, they may want to actually go on a limb and go out on some of the cyclicals and hope that the worst has passed. But the worst can still actually happen, and you can still be seeing the sense in earnings in certain sectors. On the whole, the economy, I think, will struggle through, and I believe that we'll be seeing downgrades to growth. And I think we'll also maybe seeing on specific corporates actually downgrades in credit ratings, which could increase the cost of capital. I see for Eurozone, Europe, I see a relatively mediocre picture. I see the first best outcome as Germany avoiding, let's put it this way, a technical recession and hopefully a real one, and basically growth maybe fluttering around the 1% growth if they get there. It is not going to be a great picture, and there will be a downturn at some point in the U.S., and I believe it shall be asymmetrical, that a downturn in the U.S. will have a greater downside impact on the European economy than any internal, at this point, upswing in the U.S. economy or expansionary movement that may still exist. I would be cautious here.
And on the other side, are you concerned about the energy sector? Because we do see oil prices extremely volatile, but mostly lower.
Yes, I don't believe, look, you know me, I believe that all oil bulls should report immediately to the principal's office. The headmaster's office. I do not buy the oil story. I look at the whole story there was now with the Aramco IPO, and I said it's a classic example of the insiders selling at the top. These people know something you and I do not know, which is basically that demand for oil will most probably go falling. Will start declining. So there's demand growth. So I believe it's not a great business to be in. I believe that there will be substitutes for oil or that there will be lesser consumption. And I think, quite frankly, that at this point, with all the good news we've had, let's say out of the U.S. for the economy, or relatively good news, we have had a Eurozone which is not officially in recession. We have a China that is still growing, and the prices are where they are, and there is still the OPEC constraint on production. Then I believe, in fact, that even a resolution of this famous trade dispute, which I've not as a resolution, but simply as a very slow incremental process akin to 100 years, will have relatively little impact. Anybody who thinks that if we get to step one, whatever that may be, as undefined as it is, as vague as it is, and it shall be non-committal, this I can assure you will change the picture for commodity. I think they are really deluding themselves here.
Jean, something very interesting. Yesterday we saw that actually the Abu Dhabi Supreme Petroleum Council approved the launch of a new pricing mechanism for Abu Dhabi National Oil Costs, flagship Murban crude. This is what we've heard actually after the press conference, part of the state energy company's broader transformation strategy. So this, I don't know if Murban or Murban is the correct pronunciation. Probably you can tell us this better. But what do you think about this movement, and do you think they are, like the Middle East is somehow trying to control the oil prices, and if they are going to manage to do that?
Well, look, I think when people try to adjust a little bit the mechanism to actually set the oil price at which they shall officially, let's put it this way, X discounts to sell their oil, this is simply a way of trying to improve what they see as a non-optimal situation. I think you have to look at it in a much broader sense, which is how much oil is sort of floating around, a lot of it. How much oil is in the U.S., a lot of it. What is happening with the U.S. oil, which is the key swing factor, is that we produce robustly and we export more, which means we hit them on the face in 2 points. We hit them on the face because we import less, and then we get into their markets and force these sellers out of the Middle East to sell on the Asian market at a discount, further reducing prices. So I think, no, I do not believe that the Middle East controls the price. The Middle East is extremely important. If the Middle East is not there, then we have a problem, but the Middle East is there. I believe that right now, put it this way, the balance of power in oil has never been so fairly distributed in the last 50 years as it is today, with different players playing different roles, each able to influence, but not one player able to, in a permanent sense, influence price.
And do you expect that the OPEC is going to additionally cut output in order to, how can I say, save the situation? Because I'm sure that also Saudi Aramco is pressing on additional output cuts.
Well, look, I mean, the whole Saudi Aramco story, I think, is political. It should not be seen in economic terms. This is a government whose legitimacy has been put in doubt by recent events. Let's say a year ago, and right now they have come out and said, no, we need to do an IPO to show our transformation process is actually taking place. Like Saudi Aramco was so powerful, I can calmly assure you that the price would not be where it is. I mean, I really don't that the Saudi Aramco story has to be seen in the political light and not in an economic, and I can assure you people are not they're jumping up and down waiting to get in there because they're going to have to rethink their valuations, especially, I would think, over time when they do the foreign tranche. I think that this is a game of people who are eluding themselves, who are looking at it from their point of view, still thinking they are the center of the world when they are not.
All right, thank you very much. John Ergas, Chief Economist, Tigers Financial Partners. Thank you for joining us.
Welcome. Great pleasure. Thank you.
Have a great evening, John. I just want to have a very quick look once again in the U.S. indices. So far, S&P 500, 3,094 points, 0.25% in the green territory, and those are, I mean, incredible levels. On the other side, Dow 0.05, a little bit flat, but still great numbers, 27,703, and Nasdaq Composite 8,493 points, 0.3% in the green territory. On the other side, very importantly, very important to remind that actually Trump said that if the Federal Reserve would cut rates faster, the U.S. economy and also the U.S. markets might do even better compared to what they have done already. And precisely, he said that the U.S. economy might add more, like 25% more. And also, of course, he said that the economy has exceeded expectations. And this is certainly going to be a very important point during the 2020 presidential elections campaign. That was everything from us for this evening. Thanks so much for watching. Up next is exactly the Trump address at the New York Economic Club.
Mr. Trump announced his candidacy for president June 2015, and 1 year later became the Republican nominee, clearing the field of 17 Republican candidates during those primaries, and won the presidency in his first run ever for political office. Following the president's address, we will have questions and answers from two distinguished questioners. As a reminder to everyone, this conversation is on the record. It is being carried live. So if everyone could please turn their phones to silent. Mr. President, the podium is yours, sir.
Well, thank you very much, Barbara. It's so sad that this is live. She said it's live. Well, it's always live. There's always somebody with a phone. It becomes live. Ask a lot of politicians that are no longer in politics. I want to thank Marie-José Gravis for your incredible leadership of the club. It's an honor to be here. It is wonderful also to be back in New York with so many friends and distinguished leaders, business and finance, academia, and I have to add, in real estate. All my real estate friends are here. I'm especially grateful for and to your longtime club members, because it's a club with a tremendous reputation and somebody doing an absolutely incredible job as director of the National Economic Council, a friend of mine who I got on. I've been hearing this voice for 35 years. It's driving me crazy. Larry Kudlow. Always calm, always cool, and he's just Larry. And he's terrific, I'll tell you that. 3 years ago, I came to speak before this storied forum as a candidate for president. And at that time, America was stuck in a failed recovery and saddled with a bleak economic future, and it was bleak. Under the last administration, nearly 200,000 manufacturing jobs had been lost. Almost 5 million more Americans had left the labor force, and jobs were not exactly what you would call plentiful. And 10 million people had been added to the food stamp rolls. In 2016, the Department of Labor predicted that Americans would continue dropping out of the workforce in record numbers. They predicted and projected a decade of sluggish growth, and they expected unemployment over 5%, and really 6, 7, and even in some cases 8% for years to come. The so-called experts said the America had no choice but to accept stagnation, decay, and a shrinking middle class as the new normal. That was said all the time. In short, the American people were told to sit back and accept a slow, inevitable decline. But I never believed for one moment that our magnificent nation was destined for a diminished future. I knew that our destiny was in our own hands, that we could choose to reject a future of America and really look at a future of American decline unacceptable, and to build a future of American dominance, which is what I wanted. It couldn't be any other way, or I would have never done this. I refused to accept that Americans had to lower their expectations or give up on their dreams. America is the single greatest country in the world, and I knew that working together, we could make it even greater. In 2016, I stood before you, supremely confident in what our people could achieve if government stopped punishing American workers and started promoting American workers and American companies. Our middle class was being crushed under the weight of a punitive tax code, oppressive regulations, one-sided trade deals, and an economic policy that put America's interest last, and a very deep last at that. I knew that if we lifted these burdens from our economy and unleashed our people to pursue their ambitions and realize their limitless potential, then economic prosperity would come thundering back to our country at a record speed. That's what's happening. Today, I'm proud to stand before you as President of the United States to report that we have delivered on our promises and exceeded our expectations by a very wide margin. We have ended. Thank you. I was waiting for that. Thank you. I was waiting for that. I almost didn't get it. We have ended the war on American workers. We have stopped the assault on American industry. And we have launched an economic boom, the likes of which we have never seen before. I did this despite a near record number of rate increases and quantitative tightening by the Federal Reserve since I won the election. 8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations who openly cut interest rates, so that now many are actually getting paid when they pay off their loan, known as negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of that money. Our Federal Reserve doesn't let us do it. I don't say, thank you. The smart people are clapping. Only the smart people are clapping. I don't say that's good for the world. I'm not president of the world. I'm president of our country. But we are competing against these other countries nonetheless, and the Federal Reserve doesn't let us play at that game. It puts us at a competitive disadvantage to other countries. Yet in the face of this reality, our economic policies have ushered in an unprecedented tide of prosperity surging all throughout the nation. We're paying interest. By other comparisons, we're paying actually high interest. We should be paying by far the lowest interest, and yet we're doing better than any nation by far on earth. The extraordinary numbers tell the story. Back in 2016, before I took office, the Congressional Budget Office projected that fewer than 2 million jobs would be created by this time in 2019. Instead, my administration has created nearly 7 million jobs and going up rapidly. We beat predictions. Thank you. We beat predictions by more than 3 times the highest estimate that I saw during the campaign. Nobody thought it was even possible to get close to a 7 million number. 2 million was maxed out if you were lucky and if you did a great job. Unemployment has recently achieved the lowest rate in 51 years. African American unemployment, Hispanic American unemployment, and Asian American unemployment have all reached the lowest rates in history. Women's unemployment, the best numbers in 71 years. We expect that number of 71 years, which isn't good compared to the other numbers, is it? But women also will soon be historic, we think. Blue-collar jobs are leading the way in our middle-class boom. We've added 25,000 mining jobs, 128,000 energy jobs, 1.2 million manufacturing and construction jobs, and manufacturing was supposed to be dead in our country. You would need, according to a past administration representative, at the highest level of that past administration, you would need a magic wand to bring back manufacturing jobs. Well, we brought them back, and we brought them back to over 600,000 manufacturing jobs as of today. And those are very important jobs. Nearly 7 million people have been lifted off, very importantly, food stamps. 7 million people off of food stamps. And we're getting Americans off of welfare and back into the workforce. Nearly 2.5 million Americans have risen out of poverty. That's a record. The rate of African American and Hispanic American families in poverty has plummeted to the lowest level ever recorded by far. Most of you people wouldn't know these numbers because most of you aren't very active in the market. But since my election, the S&P 500 is up over 45%, the Dow Jones is up over 50%, and the NASDAQ is up 60%, slightly more. And if we had a Federal Reserve that worked with us, you could have added another 25% to each one of those numbers. I guarantee you that. That doesn't happen. But we all make mistakes, don't we? Not too often. We do make them on occasion. American markets have vastly outpaced the rest of the world. This exceptional growth is boosting 401ks, pensions, and college savings accounts for millions and millions of hardworking families. You hear so much about inequality and all of the differences and all of the problems. The single biggest benefactors of what we've done are middle-class workers and low-income families. It's been amazing, actually. Altogether, we've added nearly $10 trillion of new value to our economy. That's in a short period of time. Remember, I only use numbers from the time of the election because I can't go to January 20th. It's not fair. We picked up tremendous stock market and economic numbers. They actually went wild the day after I won. I think that should be attributed to us, not attributed to somebody else, because it would have gone in the opposite direction. It would have gone in the opposite direction had the other result taken place, which fortunately it didn't. Last year, GDP growth matched the fastest rate in more than a decade, and it was the best of the G7 countries by far, by far. Perhaps most importantly, after years of stagnation and decline, American wages, salaries, and incomes are rising very fast. Median household income is now at the highest level in the history of our country. The average median income under President Bush rose only $400 over an 8-year period. Under President Obama, it rose $975 over an 8-year period. And under my administration, it rose $5,000 over slightly more than just 2.5 years. That's a big difference. And if you remember, President Obama was paying 0% interest for a long period of time, while we're paying a much higher rate of interest. But in addition to the $5,000, we have to add $2,200 for the tax cuts, average tax cuts, and $2,000 to $3,000 for regulatory and energy cuts. So that would be a total of almost $10,000 versus $400 and versus $975. So that's something. So you have over 8 years, you have $400. Over 8 years, you have $975. Over 2.5 years, we're almost up to 3, but this was done and calculated only as of 2.5, and it's only gone up since then. We're at almost $10,000. So our consumers, because of this, are in the best shape probably in the history of our country, and I think it's going to be very long-lasting, very, very long-lasting. This also allows me the latitude and timing to take some of the horrible incompetent, just terrible trade deals that have been made over the years and make them great. It's like make America great again, make the trade deals great. I don't know if I can use the word again. Make them great, period, because I don't think they were ever any good. Haven't seen it. We were great, and then we weren't so great, but we're great again. And by the way, on jobs, just now, I'm glad this is today, because just now, they just announced we have the highest number of people working in our country, in the history of our country, almost 160 million people. We've never been close to that number. So we've achieved this stunning turnaround because we've adopted a new economic policy that finally puts America first. As president, I understand and embrace the fact that the world is a place of fierce competition. We're competing against other nations for jobs and industry growth and prosperity. Factories and businesses will always find a home. It's up to us to decide whether that home will be in a foreign country or right here in our country, our beloved USA, and that's where we want them to stay and be and move to. If we want our families and communities to prosper, America must be the best place on earth to work, invest, innovate, build, pursue a career, hone a craft, or start a business. We want companies to move to America, stay in America, and hire American workers. My mission is to put our country on the very best footing to thrive, excel, compete, and to win. For many years, our leaders in Washington did the exact opposite. They imposed the highest corporate tax rates in the developed world, so high that people couldn't even understand what they were doing, and they would leave. Very, very smart executives didn't want to leave, but they would leave, sending our jobs and everything else all aflutter. They waged an unethical regulatory assault on the American people. They tried to shut down American energy, and by the way, they're still trying. You want to see energy shut down? Take a look at what I'm competing against on the other side. I don't think they even believe in energy. So far, I haven't found any form of energy that's acceptable to them. I think they think the factories are just going to work without energy, don't they? They don't have a clue, these people, but I don't want to mention it yet. I want to wait a little bit longer. Let them go a little bit further so they can't take it back. Because as a campaign, I like it. I like it very much. Let them keep talking. Every time they talk, I say, boy, this looks like it might be easier than I anticipated. They passed the disastrous trade deals that encouraged the shuttering of American plants and the offshoring of American jobs by the millions. In short, the failed political class sold out American workers, sold out American prosperity, and sold out the American dream. This was the alarming situation I was elected to end. And ending it's never that easy. You see that. You do have people that want to keep it going that way, but they're losing, and they're losing now rapidly and fast. Those days are gone, and we're not going back. As you know, one of the key insights of economics is the power of incentives. Unlike past leaders, my goal is to ensure that this power works for America's favor and for America's workers and for America's companies. We want the incentives created by our tax, trade, regulatory, and energy policies to be pro-growth, pro-worker, and 100% pro-American, and more is yet to come. If we take back the House in 2020 and retain the Senate and the White House, you will see things that even this room, and you've experienced a lot of great times over the last 2.5 years, but even you will be surprised to see. We have tremendous economic potential. We have tremendous potential. We have tremendous economic potential. At the heart of our economic revival is the biggest tax cut and reforms in American history. We provided massive relief for working families, saving $2,000 a year for a typical family of four. To bring jobs back, we lowered our business tax rate from the highest tax rate in the developed world down to a very competitive number, not quite the lowest, but getting close. And we may even be able to get there one day, in the not too distant future. And by the way, we're taking in more tax revenue with these greatly reduced rates, 21%, and it was 39, but when you added everything else, it was well into the 40s. And you couldn't bring your money back because that was prohibitive. Both ministerially and from an economic standpoint, the rate was so high. But we brought it down to a level that we're very proud of, and we think we can bring it down still more, and yet we have more tax revenues coming in to our Treasury than we've ever had before. That tells you something right there. Since then, nearly $1 trillion have returned to our shores where that money belongs. Couldn't get it back. No matter what you did, you couldn't do it. It was not only the rate being so high, but the bureaucracy, the documents, the signings, nobody could do it. To promote investment in distressed American communities, our tax plan created nearly 9,000 opportunity zones, which are one of the biggest successes that you've ever seen. I don't think there has ever been anything like it. Worked with Tim Scott, Senator Tim Scott, South Carolina, and many of the great senators that we do work with, and frankly, Congress. So we passed something that nobody thought was possible to get passed, and nobody thought it could ever work the way it is. Capital gains on long-term investments are now taxed in an opportunity zone at zero, and money is flooding in. Investment is pouring into these long-neglected communities. The government wasn't putting money in, nobody was, they were dying. And now tremendous, they call it neighborhood push. It's incredible what's happening. It's not spoken of by the fake news media, but they should speak about it, because I will tell you, it's one of the great successes that we've all had. And it's employing tremendous numbers of people, and you have communities that were down and totally out, and they're reviving like nobody's ever seen. Opportunity zones, remember those two words. We believe in no American left behind, and we understand the enormous power of investment, capital, and opportunity to revitalize communities and bring hope where it is needed the most. To liberate our economy, my administration launched the biggest, boldest, and most ambitious campaign to reduce regulation. Nobody has ever come close. No administration has ever come close. In 2.5 years, we've done far more than any other administration, whether it was 4 years, 8 years, or in one case, more than 8 years. Nobody's come close to doing what we've done with regulations. And I happen to think, as great as the tax cut was, the largest in our history, I really happen to think that the regulation cuts may have had an even bigger impact on the economy, and it was quicker because we were able to do them very early in the administration, earlier than the tax cuts. Within days of taking office, I issued an executive order to end the outstanding, horrible federal intrusions that you saw. It was an onslaught into business, into people's lives, and it was really done by unelected bureaucrats. They were really accountable, and nobody held them accountable. And sometimes it's not pleasant to hold them accountable, but I do it. And we had no choice because we were going nowhere fast. My order required that for every one new regulation, 2 old regulations must be eliminated. But instead of 2 for 1, we have now eliminated 9 for 1, and we think that within the next 6 months, it will be close to 20 for 1 instead of 2 for 1. And it sounds like a lot, but you have no idea when you look at the piles and piles and piles of regulation on each one of our great secretaries. We have some great people working here. But you'd go into rooms that are half the size of this, and they would literally be stacked to the ceiling with regulations. Nobody's ever seen anything like it. And we have actually, I think, a fairly long way to go. We need regulation, but it has to be smart regulation. Highways were taking 20 years to get built, to get approved. You'd put in an application, 20, 21 years later, they'd reject it. It would cost many, many times more, 25, 30, 40 times more. But they were taking 20 years. We're trying to get that down to 1. And it may get rejected, and that's okay. But you haven't spent 20 years on environmental impact statements in order to build a simple highway or roadway that's desperately needed. So we have it down close to 1 year. We want to hit the 1-year number. And if it doesn't work, we're going to reject it, but it's going to be rejected fast, swiftly. But mostly it's not going to be rejected. We ended the ridiculous Waters of the United States rule. What a beautiful name. The name was beautiful. The act was a disaster. It didn't allow you to do anything. When I signed it, I said, you know, Waters of the United States, what could be a more beautiful title? I'm going to get killed when I signed this. To kill it. I had to kill it. It made land development prohibitive. It made impossible situations for farmers, for everybody. And I had 35 people in my office, farmers and builders and ranchers and others, strong people, very strong men and women, and almost all of them were crying. They said, you've given our life back. These laws were horrible. They took away everything. You would have a puddle in your land, and they would call it, you were under river control, you were under lake control for what is called a puddle. You couldn't get anywhere near it. And if you did, you'd literally be arrested. We're streamlining approvals for critical infrastructure. Our regulatory roadblock is also leading to major price reductions in healthcare and prescription drugs. We've gotten the prescription drugs down, first time in 53 years that prescription drug prices have gone down. And if we had help from the Democrats, which we do not have, you possibly have noticed that, we would be able to cut prescription drugs by 30, 40, and 50%. I've told some of the governors, Ron DeSantis in Florida, go buy them from other countries. I'm okay with it. I'm going to give them an executive order because Canada and other countries sell the exact same drug from the exact same factory for sometimes 50, 60, and 70% less than we do. And rather than going through the political charade and all of the things where the middleman, I hope we don't have any middlemen in here because somebody's not going to like me too much. We have a middleman. Any middlemen? I think they have to be the richest people in the world if you want to know the truth. They make far more than the drug companies in most cases. But I said, buy it from other countries. You go out to other countries, and what's happening already is the companies are coming back and they want to make great deals because now I'm giving the right to governors to go to Canada, go to England, go all over Europe, where the prices are so much less. Because we were forced to pay for all research and development, and they didn't pick up any of the costs. Ridiculous rules, so unfair to our country. I said, buy them from other countries and pass along the savings. The savings will be staggering, and we're starting that program. But as soon as we start that program, watch what happens with the drug prices. They'll come down over here. Because it's the same companies that make the drugs. It's the exact same companies, hard to believe. Altogether, our regulatory cuts, as mentioned, save American households thousands and thousands of dollars every year. The foundation of American liberty and prosperity has always been the rule of law. Throughout history, economies have failed when the rule of law is abandoned. That's why we must protect the constitutional rule of law in our country at all costs. So important. We've got some lawless people in some very high positions. They're lawless. For this reason, we have now appointed, as of today, 161 and fully approved brand new federal judges, Court of Appeals judges, to interpret our Constitution as written. That will soon be 182 judges. And as you know, 2 Supreme Court justices who are great gentlemen, both fully in and making some very big decisions even today as we speak. The 161, 162 that we have now will be at 182 within 2 months, and then we normalize, meaning we go through the normal system. When I came into office, one of the first things I said was, how many federal judges do I have to appoint? Because I always heard it was the single most important thing a president can do, federal judges and Supreme Court justices. They said, sir, you have 142. I said, what? Because I was always told you would never have any. Maybe you'd have 1 or 2, maybe 3 if the previous president wasn't doing a good job. But they said, you have 142. I said, you have to be kidding. And we did. We had 142, and we've added to that through different things. And we will be at 182. That will be a record. Nobody's ever done that before. It was shocking, but I just want to say thank you very much, President Obama. We appreciate it very much for the 142. Thank you. I'm sure his party is thrilled with him, but if they aren't, they won't say anything. Don't worry about it. Thanks to these and other policies, last year the World Economic Forum recognized the United States as the globe's most competitive economy. We've put it back into this position where we are competitive like no other nation. To fuel our economic boom, we are boldly pursuing American energy independence. And you see that in the Middle East, where ships are at great danger, and they keep saying, what happened to the American ships? They don't see too many American ships over there anymore. Do you notice that? We stopped the radical crusade to dismantle U.S. energy production and empower rogue regimes. We withdrew from the one-sided, horrible, economically unfair, close your businesses down within 3 years, don't frack, don't drill, we don't want any energy, the horrible Paris Climate Accord that killed American jobs and shielded foreign polluters. It was a disaster for this country. Ask them, how are they doing in Paris with your Paris Accord? Not too good. And I will tell you, when I signed, that was another one. Clean waters of the United States, well, the Paris Accord too. And I said, this is going to take guts. I just closed my eyes and I signed it. I got one day of a big hit from some of the radical left newspapers, and then after that, everybody thanks me. They thank me so profusely. You're talking about trillions and trillions of dollars of destruction would have been done to our country with the Paris Climate Accord. And it is so unfair. It doesn't kick in for China until 2030. Russia goes back into the 1990s, where the base year was the dirtiest year ever in the world. India, we are supposed to pay them money because they're a developing nation. I said, we're a developing nation too. Why aren't we? Under the WTO, China is called a developing nation. So we wrote him a letter recently. Larry knows it. I'm not sure Larry liked the idea too much, but he went along with it. We wrote him a very tough letter, Larry, and we said, what? Oh, Larry wrote it. He said, oh. Well, you hopped on that bandwagon quickly, didn't you? That's okay. But we wrote him a letter, and we said much more strongly than the letter that not fair to have China as a developing nation. One of the reasons they've taken advantage of us is because of that, and we're considered the big fat cow, and no longer. We have a lot of things to work out. And I will say this, because they know that I'm very tentative on the WTO, we're winning cases for the first time. We just won a $7.5 billion case. We never won cases. They'd rule against us because they said, hey, don't worry about the United States. They're the stupid people. Don't worry, rule against them. Keep rule. We had case after case. Now we're winning cases because they really think that I'll do something very powerful, which we have the right to do. And they're right when they think that way. And we're winning a lot of cases at the WTO level that we never even would have thought of winning before. America is now the #1 producer of oil and natural gas on the entire planet Earth. Net energy imports. net energy imports, this is so great, set a historic low. It's a 58-year low, but that's only because they only go back 58 years, meaning I assume if it's low now, it's lower than it used to be, unless something happened that's very strange back then. But it's at a historic low. We are now a net exporter of natural gas, and we recently became a net exporter of crude oil and petroleum products for the first time in our country's history. It's a big thing. According to the Council of Economic Advisors, the astonishing increase in production made possible by the shale revolution saves Americans $2,500 for a family of four in lowering electric bills and prices at the pump. And the number is actually now even higher than that. My administration is also restoring the principle that to be a strong nation, America must be a manufacturing nation. These are great jobs. These are brilliant, great people that know how to manufacture. These people were underappreciated and undertaken care of, but we take care of them. We cherish them. Past leaders wrote off American manufacturing as dead, but their policies were the ones that were actually killing it. We killed manufacturing. That's why we were losing all those jobs, because we made it impossible to manufacture. We've opened it all up. After losing, and this is a number that's hard to believe, and I've been saying it for 3 years, and I know it's right because the fake news has never corrected me. If it was wrong, it would have been headlines. Trump made a mistake. But they can't say it. After losing 60,000, can you believe that, factories under the previous two administrations, America is now gaining over 10,000 brand new, beautiful factories, and many, many more than that want to come back in, because under my administration, we're producing jobs and incentives for these companies to come back. I'm calling, as an example, Prime Minister Abe of Japan. I say, Mr. Prime Minister Shinzo, we have a tremendous problem. We have big deficits with your country. You got to start building plants. He's building many, many car plants now in the United States that he would have never built here if you didn't have this kind of a president. And he's very happy to be doing it. But they're all coming back to the United States. They want to be where the action is. Very simple. They want to be where the action is. This is where the action is. There's nobody close. There's no country close. When I meet with the leaders of countries as they come in, kings and queens and prime ministers and presidents and dictators, I meet them all. Anybody wants to come in. Dictators, it's okay. Come on in. Whatever's good for the United States. We want to help our people. But the first thing they say to me almost always, congratulations on your economy. They all say it, congratulations, it's incredible what's happened to your country, it's incredible what's happened to your economy. First thing they say in almost every instance. But central to this comeback is a series of bold initiatives to reform a broken system of international trade. We want thriving commerce with as many countries as possible, but trade must be fair, and to me it must be my favorite word, reciprocal. It's not reciprocal. We're getting it to be much more reciprocal. The American market is the most valuable and coveted market anywhere in the world. Those who want access must play by the rules, and they have to respect our game and our laws, and they have to treat our workers and businesses fairly, not the way they've been treating them over the last 25 years. America will not be taken advantage of anymore. Many countries charge us extraordinarily high tariffs or create impossible trade barriers. Impossible. And I'll be honest, European Union, very, very difficult. The barriers they have up are terrible. Terrible. In many ways, worse than China. We're working on legislation known as the United States Reciprocal Trade Act, meaning quite simply what's good for them is good for us. They want to charge us, we charge them. It's a very simple thing. Even people that aren't well versed in what we all do say, I went to a couple of senators, Went to Lindsey Graham. I said, Lindsey, let me ask you, what do you think of that? They're charging us 100%. We'll charge them. That makes sense to me. Really does make sense to everybody. Because it's very unfair the way we're treated by certain countries. There are certain countries that the average tariff is over 100%. And we charge them nothing. And then they call it fair trade. That's not fair trade. That's stupid trade. Of course, this will be subject to regaining the House to be able to do these things. Nowhere has the change in U.S. strategy been more vital or dramatic than in our dealings with respect to China. Before my election, Washington politicians stood by and did nothing while China ransacked our companies, stole our intellectual property, subsidized their industries at the expense of ours, and dumped their products in a deliberate strategy to close American factories all across our land. For many years, Americans, leaders have just sat back. Maybe they didn't understand what was going on. It's impossible to believe that. But they just let it happen. And it's gotten worse and worse and worse. And now we've changed it. It's changed a lot. I'm sure you haven't noticed, but it's changed a lot. In particular, since China's entrance into the World Trade Organization in 2001, no one has manipulated numbers better or taken advantage of the United States more. And I won't use this word, cheated. I will not say the word cheated, but nobody's cheated better than China, but I will not say that. We'll say that off the record, okay? And there's only about 600 cameras back there. In fact, that is a big group up there. Good, I hope you use it, because it's true, and they understand it's true. And I don't blame China, by the way. I blame our leaders, because we should have been doing what they were doing. They did it to us. We didn't do it to them. We were defenseless. We had no leadership. This is for a long time. This is long beyond the Obama administration. So I don't blame them. I said this to President Xi. I was making a big speech in China. I had 5,000 people in front of me, and I was talking about how bad China was. And I said, this is not going over well. I was in Beijing, this massive hall, and I looked down at President Xi. He was sitting right where Larry is. He was not as imposing a figure as Larry Kudlow, but he was quite imposing. And I said, you know, I think he's getting very angry. And then I realized, how do we save this? This is going to be a disastrous afternoon. And I said, but I don't blame China. I blame our leaders. And then I realized it's true. I blame our leaders for allowing it to happen. I've told that to you and many people many times. But the theft of American jobs and American wealth is over. They understand that. My administration has taken the toughest ever action to confront China's trade abuses. We're taking in billions and billions of dollars in tariffs that China is paying for. We're not paying. China is paying, because they're devaluing their currency to such an extent, and they're pouring tremendous amounts of cash into their system. They're having the worst year in more than 57 years, more than half a century. Their supply chains are cracking very badly, and they are dying to make a deal. We're the ones that are deciding whether or not we want to make a deal. We're close. A significant phase one trade deal with China could happen. Could happen soon. But we will only accept a deal if it's good for the United States and our workers and our great companies, because we've been hit very hard. We'd have deficits for many years, go back many years, $500 billion a year, not million. $500 million a year is a lot. $500 billion a year trade deficits with China. And we have them with many other countries, just not nearly as large. China probably makes up almost 60% of our deficits. We also renegotiated the last administration's failed trade agreement with South Korea. It's a terrible agreement. Our new agreement doubles the number of American cars that can be sold to South Korea under the U.S. standards, and it keeps America's 25% import tax, known as the chicken tax on small trucks, which was all ready to disappear. It was going to disappear. The deal from the previous administration was projected by them to add 250,000 jobs, and they were right. It did add 250,000 jobs. Unfortunately, the jobs went to South Korea, not to the United States. That's what we got stuck with. We also struck a deal, which is historic, with Japan. It's just partial because we're having very tough negotiations and strong negotiations with Japan to substantially reduce barriers for American agriculture and facilitate $40 billion in digital trade and agricultural purchases. That deal was signed. And it's a great deal, but it's only phase one of the Japan deal, too. A lot of these leaders don't like me too much, folks. When you hear that I'm not so popular in various countries, please don't accept that as, gee, he doesn't have a good personality. Just realize what I'm trying to do for you. It's about time, okay? Please. They recently came out with a poll that President Obama is much more popular in Germany than I am. I said, guess what? He should be. He should be. The day I'm more popular than him, you know I'm not doing my job. Let's put it that way. Because we're treated very badly by countries. They take advantage of us, and they have for many, many years. It's hard to break that cycle. But we're breaking it, and we're getting along with them, believe it or not. We're actually, I think they respect us far more today than they ever have, if you want to know the truth. We're replacing one of the worst trade deals ever in history, NAFTA, with a brand new U.S.-Mexico-Canada agreement, a historic win for American farmers, energy producers, and manufacturers. And the reason it's such a good deal for us is I said, listen, if you don't sign this deal, we're going to charge you tariffs on your product coming into the United States, including all of those cars that are now manufactured in Mexico. 30% of our business was lost over the last 20 years, went to Mexico. I said, so if you don't sign it, so it's good agreement, we're going to just charge you tariffs, and they signed everything we wanted. The USMCA will create up to 500,000 American jobs and add at least 1.2% more to our total GDP, and it should be much higher than that. Yet Democrats in Washington would rather pursue outrageous hoaxes and delusional witch hunts, which are going absolutely nowhere, don't worry about it, than pass the USMCA and deliver real stuff for the American workers. It's a great bill, USMCA, and put pressure on the Democrats. There's tremendous pressure already. And most of them, if you had a vote today, I think most of them would actually vote for it. But Nancy Pelosi, nervous Nancy, has to put it out there and sign. And if she doesn't, she's doing her party a tremendous disservice, and she's doing this country a tremendous disservice. As we create millions of new jobs, we are also transforming lives. Under the last administration, nearly 1.8 million Americans in their prime working years simply gave up. They gave up looking for work altogether and dropped out of the labor force. Under my administration, 2 million prime-age Americans have come off the sidelines already, people that we thought maybe would never work again, and they fully rejoined the labor force, something we're very proud of. And this includes a group that was having a hard time from the day of our founders, the day they signed. These people have had a hard time. They're former inmates, people that went to jail, who are getting a fresh start thanks to the landmark criminal justice reform bill that I signed into law, but maybe equally so because the economy is so good. They're coming out of jail now and they're getting jobs, and I will tell you, the people that have been hiring them, and I get reports, they cannot believe how good they've been, and obviously not in all cases. But it's incredible. First time they've ever had an opportunity. They get out of jail, and they end up with a great job, and they cherish the job more than you would, more than I would. They can't believe what happened to them. And they're doing a phenomenal job. First time it's ever happened in the history of our country. It's really terrific. When we say hire American, we mean hire all Americans. By focusing on the needs of people, not the desires of government, We're helping our citizens realize their ambitions and pursue rewarding careers. Over 1.1 million fewer Americans are now forced to rely on part-time work today than when I was elected. That's a tremendous number. People are working 2 jobs and 3 jobs and making less money than they made 21 years ago. That was the stat. A record number of Americans are quitting the job that they have to take a job that they like even better. They like the job better. They like getting up in the morning, like we all do. They like going to work. And they have something that they can do, and they're getting paid more money for it, which is something that's probably never happened before in this country to the extent it's happened now. This increased competition is driving up wages for blue-collar workers who are the biggest beneficiaries of what we're talking about and all the things that I'm mentioning today. Real weekly wages for the lowest paid earners have grown more in the first 3 years of my administration than in the entire decade before my election, and decade and much more than that. Since the election, real wages have gone up 3.2% for the median American worker, but for the bottom income group, real wages are soaring, a number that's never happened before, 9%. And that means you might make a couple of bucks less in your companies. You know what? That's okay. That's okay. This is a great thing for our country. When you talk about equality, this is a great thing for our country. Our tight labor market is helping them the most. Yet Democrats in Washington want to erase these gains through an extreme policy of open borders, flooding the labor market and driving down incomes for the poorest Americans and driving crime right through the roof. They want nothing to do with looking at the people that are coming in. And some very, very bad people are trying to get in. But we're building the wall. It's going up rapidly. We have tremendous help from Mexico. Despite what you read, it was a terrible thing that you read over the last period of a few days, but also over the last years. But they have 27,000 soldiers on our border now, protecting us from people coming into our country. And because of that, I'm not tariffing Mexican goods. So it works out well for everyone. But we have 27